or you want to go, we want to walk off from the project, you determine a price and give it to me. So it could be any of the thing. So what landowner gets is a revenue for these units. He doesn't get a single unit. Even if he wants a unit, he has to buy, right? If you are doing any of the units registration, you are taking a power of attorney of the builder. As a builder, you are taking power of attorney by virtue of joint development agreement, and you are transferring the undivided share, right? But will the landowner get all those units? Right answer is no. By virtue of joint development agreement, those units belong to the builder. Even if landowner wants one unit, even he has to do a registration of that unit. Let's say I am entered a revenue sharing agreement. Out of 100 units, finally let's say I want to keep one unit. Even for that unit there has to be a registration, because it's a revenue sharing agreement. Now from the taxation perspective, this is little simple and pretty straightforward. There is no construction services. All the units are with the builder only. So there is no construction service tax. So no unit is given to the landowner. So no construction service tax. Adirala. The units which have been sold to the end customer before OC, that is same, that will continue. For the units which are unsold on the OC date, though I did not give any of the units to the landowner has sold me development right. That did not change. So the development right taxation will still continue, and the builder has to pay tax on the unsold units. So whether it is a revenue share or an area share, the builder would end up paying tax on all the units that he has constructed. Yeah. Any questions? Now, whether landowner has to pay anything? Nothing. Landowner has kind of sold his land, he got his money. In a revenue sharing agreement, landowner will have zero liability. There is no requirement of registration of GST by the landowner in a revenue sharing agreement. However, the tax portion, the effective tax portion will be little higher in a revenue sharing agreement, because in a area sharing, the landowner units I am computing tax at the starting rate, which is generally at a lower thing. So very, very nominal, not a major difference, but in terms of the absolute quantum of the tax, the revenue sharing agreements may be little higher. But the best thing is the landowner need not do it. Now, will landowner agree for revenue sharing agreements? Now he will have his own risk. He will say that, like, why will I do it? I don't even know he's a small builder. So will he sell? Will he has ability to sell? How long I have to wait? Again, those questions. So these are commercial decisions. Right? It's your ability. That is why big builders, if you notice, most of the big builders only do revenue sharing arrangements. Yeah. Any questions on any of this?
Sir, I have a small.
Yes.
I'm slightly deviating from the subject of GST.
Right.
I'm going into income tax. So what happens here in the land transaction? If I were to sell land as is, what happens is I get what is known as indexation. I think now the indexation is also there.
Yeah.
Okay. Now, because I get indexation, the capital gains is not much.
Right.
All right. I mean, I'm just
absolutely, yes.
Hypothetical.
Yeah.
Now, the moment there's a value add, which means there is a profit.
Right.
So, doesn't the landowner lose that kind of this thing by way of income tax? Because the entire thing is considered as today's value.
Right.
All right. So, what happens then? He loses 30%, 33% or whatever.
Right.
So, how does it compare?
Okay.
Therefore, I'm saying, I mean, you would have seen me nodding my head on this revenue sharing agreement. I mean, I have my own doubts.
No problem. Okay, so let's jump into income tax, not part of the subject, but a quick understanding. Now, land is a capital asset. For a transfer of a capital asset, what people get is a capital gain. But when builder is selling this property, will he pay capital gain? Answer is no. It is a business for him. He is into trading. Now whether it is an area share or a revenue share, for the landowner, it is a capital asset till the date he signs the joint development agreement. On the date of joint development agreement, it ceases to be a capital asset and it becomes a business income. Because he said that I want to venture, and he is also a promoter. Now, so there are various cases, and now the law has been settled. So take the value of the land as on the date of the joint development agreement. Take the value of the land as on the date of joint development agreement. That value is notionally treated as the sale of land. Notionally. Okay. Compute your capital gain tax. They have given a relaxation like how GST we pay on the OC date. They have given a relaxation upon receipt of money or upon handover of the things. There is a relaxation, right? After that, whatever is the incremental value that you get, how do I get an incremental value? Like I have computed the land value of, let's say, as 30 crores. I have received 40 units. When I sell these 40 units, I am getting 40 crores. That means I am getting 10 crores incremental. So this 10 crores will be treated as a business income. So I have converted a land from a capital asset to inventory. So on the date of conversion, whatever is the value, that becomes my purchase of inventory, and I've sold inventory, I made a gain of 10 crores. Whether it is a revenue sharing agreement or an area sharing agreement, technically it doesn't make any difference in the income tax. But there would make a difference in payment of the taxes. In an area sharing agreement, I can defer the payment of the taxes till the end or till those units have been sold. Because I can say as a landowner, look, I did the JD, but I don't have money. So the government gave the relaxation. But in an area sharing, I am getting the money as and when the units are selling. So the cash outflow of the income tax by the landowner will be little higher, or not higher, it will be faster because the money flow is coming in. Otherwise, from the taxation perspective, both are one and the same. The benefits would be accrue evenly to the landowner. Yeah, hope that clarifies. Okay, so whether for the unsold units or the sold units, there will not be any GST applicable to the landowner in case of a revenue sharing arrangements. Are we clear? Any questions? The next part of our discussion, which again most of you are doing, is the plotted development.
Before that, I have
Yeah.
Working model. If you just give us an opinion, where we create an LLP, landlord comes with the land to the LLP, and the other party comes with the capital. Is it complete?
I'll repeat the question. Don't worry.
Hope it's not covered. I'm late.
It was covered, but that's okay. For the benefit of others, I'll repeat.
Yeah, but it's only 2% we need to pay on the transfer of land. So that works out to be better. What's your opinion on that?
Okay. So, sir is now talking about the JD versus JV, which we discussed, where we created a SPV and the land is introduced by the landowner as his capital contribution. So we discussed that. There you don't have construction tax. There you don't have development right tax because it's the SPV who is selling it. There the landowner do not have land. He sold to SPV. He transferred to SPV. The moment when he transferred to SPV, he is kind of introducing land as a capital contribution. It suffers stamp duty. At what rate? Different states have, because it's a state subject, different states give a different leeway. So some say 3%, some say 2%, but I don't want to get into that subject. So land is sold by the landowner to the SPV. Now SPV is doing all the activities. So what you will avoid is two things: one, construction tax; second, development rate tax. But what you will be end up paying is a stamp duty at the first thing. The second challenge is you are married to the landowner now. He is a partner in your business. So now, which most of the time he doesn't understand financial transaction. Now, some cash you said that I have paid, that he will say that okay, I want to see whether you paid or not. So you'll end up with other problems. But it's possible, yes, as long as you sit on the thorns and you're okay that it is not hurting at a wrong place. That model is also there. You can work it out. All right. So now plotted development. Now what is happening? We are bringing this uneven land again. I am picking joint development. I will share the buying and selling also. I'll say. So I am giving it to the developer, and developer puts all the work. What is that? First he gets the design plan drawing approval, and he would get the start work after the plan approval, which could be tilling the land, leveling the land, laying the underlying STP, various activities he would be doing on the land, and he finalizes and gives a finished product, which is like it became into plots. Once it is becoming into the plots where people agree on a sharing ratio, the landowner will say that okay, fine, a portion of units of this will be yours and portion of it would be mine. Question that comes is, when this is sold as plot, when this is sold as plot, will there be a GST? What would you say?
No, as
Not
a
on the land, but
as a whole plot.
Of course, it will be sold. Both builder will be selling his units, landowner is also selling his units.
There are services.
Definitely, there is a service for the landlord.
There is a
There is a service for the landlord.
there is a service for the landlord, correct?
Landlord share he has to.
What we do is we pay GST on the development cost only, not on the.
What we pay is GST on the development cost. What is the development cost?
It's about 30%.
About 30%. Okay.
On land price there will be no GST.
On land price there is no GST. Okay. All right. So now let's look at the department perspective. First, when you sell the land, no GST. I want you to get it because it's a state subject. State subject, that means center cannot levy service tax, no excess duty, no GST. But what is outside the purview is sale of land. Now let's take, you are selling the plot at 1,000 rupees per SFT. From the customer, how will you collect? Will you collect 1,000 rupees or will you say 1,000 rupees plus 200 rupees development charges? Generally, you will say all inclusive 1,000 rupees. Right? You will not put an itemized item and say extra 200. So when you are collecting at 1,000 rupees and you are paying stamp duty for that, it's an immovable property, no GST. Whether sold by the landowner, whether sold by the developer, builder, there is no GST on the sale of plot by the landowner or by the developer. Now, unfortunately, I have jumped into the discussing the last part of it, which is the never a right way of discussing, right? So, this is what initially we said, right? There will always be 4 supplies. Landowner gives a permission to developer to enter. Developer converts into plots. Then the plots are sold. So when landowner is selling the plot or developer is selling the plot, no GST. That's what I said. But question that comes, the question that comes is, when these plots got developed, when the plots got developed by the developer, In an apartment construction, 35-40% goes to the landowner, 60-65% is with the builder. But in a plotted, reverse. Like 30% or say 20% of the project value is the development cost, so 10% is your margin. So looking at the optics of that location, you will be doing the sharing ratio. A question that comes is, you are selling the land given to you by the landowner by virtue of the JD. Why should the landowner give that to you by virtue of the JD? Why should he give you?
To develop.
He's not competent.
To develop. He is not competent to develop, you develop. What did you do? You develop. That means you did all those activities, got the plan sanction, you leveled it, you digged, you did STP, or drainage, everything. What is that? It's a service. Service to whom? To you? No. Landowner. You will get those units only when you complete those activities. Right? So you did the service to the landowner. Landowner has given you the land. So the government wants you to pay GST on the service that you have given to the landowner. That's okay. I did not take any money. So how do I value it? Government says, no problem. You didn't take any money, but he has given you land. Treat the value of the land as the value of the service that you have provided. Now, how do I find the value of the land? You are selling those units, right? Whatever you are selling at a price, that means that's the value of the units that you are receiving. Treat that as a value and pay GST. At what rate? 18%. And you will get input tax credit. Right? Because it's a supply of construction activities, leveling the land, different HSL, not construction of an apartment. Right? So you will get an ITC. Most of the people again commonly make mistake is either they pay 5% tax or they will say that okay, I did not get the money, don't take an input tax credit. Now these are the issues that would come in, right? In principle, you understood the concept in the plotted development. Any questions?
What in case of LLP in land?
So now in land development, it could be quite common saying that I will put it into an SPV or I will buy the land. I have a land parcel, I will develop it. So we have circular 177 which said that, see, when you are selling the land after leveling, laying down drainage lines, whatever you are doing sale of land. Sale of land is outside the purview of GST. You don't need to pay GST. It's a Schedule 3 Entry 5. Sale of land is neither supply of goods nor supply of services. Hence, no GST. You don't need to pay GST. But however, there are builders who may say that I will collect additional, that instead of 1,000 rupees, I may say 900 rupees towards land, I will pay stamp duty. 100 rupees, I will collect it as development charges. So if you are collecting anything in the name of development charges from the customers, and there are builders who have the practice of collecting some amount as development charges, if something is stated otherwise separately and you are collecting, on that additional amount which you are collecting, you pay GST on it. But you are saying everything towards land and you are collecting and paying stamp duty, then that's a value towards the land and no GST, right? So when in an SPV or a own development, when the landowner or when the builder who has bought the land or formed an SPV, doing all the activities in the JV, there is no GST. There is no GST because it's my land, I have done, so I cannot do a service to myself and pay GST on it. Hence, no tax, no GST in case if it is sold after developing on my own land. Hope that answers your questions. Right? Any other questions to anyone? So,
if it is collected as development charges separately by the
Builder, developer.
or developer, he will get the input tax credit on that,
Yes. Builder gets input tax credit
on that.
on that, yes. Builder is selling the service, that is why he got the land. So here there is no concept of the rule 42 proportionate, that concept doesn't arise here.
So whatever is the cost of the site, on that 18% is the GST.
Whatever is the sale value of the site into 18% is the GST. Because there is no cost. How do you know cost? You are a developer. Landowner's cost. You don't even know his cost. Or if there are no units sold, whatever is the guidance value. If you have 10 units, 8 sold, 2 unsold, 8 actual value, the 2 unsold last sale value.
When is the incidence of tax?
Incident of tax is the only dicey area in case of a plotted development, because the question that comes is when is the supply. Section 7 says that supply includes agree to supply. Now, point in case of an apartment construction, the law, the 3/2019 has clearly specified on the OC date and wherever the monetary transactions involved for the commercial portion on the cash transaction date. But for a plotted development, there is no incidence of tax defined in the law. The only reference we have is 4/2018, which is given in 25th January 2018, which will be handover of a documents or anything. So most people adopt the incidence as the OC date, or I will not say OC for a plotted, the release order whenever you get it, that is the date as taken as a benchmark because you have completed the service. So you would be proving that because the time of supply under section 13 for the supply of services, service has to be completed. Now where do I go proving that supply of service is completed? There is no definition of the completion of supply or satisfaction. So we would go to Consumer Protection Act 2019 where it says that how do I say the supply is complete and not deficient. Borrowing that the definition from there, the supply of service could be whenever is your release order and you have agreed that you have completed the work. So the last incident date would be that if you are not selling. If you are already selling the units, that means you cannot sell what you don't have. So if you are already selling the units, the incident of tax will fall on the dates on which you are selling the units.
Without RERA, without 100% release, there's no sale anyway. So it has to be the final release order. On that day, the SR value, you're saying you have to pay the tax.
No, with the RERA, you still have ability to sell, right?
Not getting RERA themselves.
Ah,
So,
no, I'll only go as per law.
no, meaning there's a release order, 100% release order. There's no sale deed as on that day because.
No, sale agreement.
Okay.
That is why section 7 supply includes agree to sell. So sale agreement matters. See, otherwise if you look at apartment or plot, you will always do the sale deed when it is complete. When I am doing the sale deed, that became an immovable property. Now if you go with the tangent saying that on the sale deed when I am selling, then you are selling an immovable property, then there is no GST, right? So that is why the levy is on the supply. Supply is not actual sale deed, sale agreement.
Sale agreement may be cancelled at any point of time before entering the sale date.
No problem. You issue a credit note. Government recognizes this. You issue a credit note by 30th November of next year. Whatever the taxes that you have paid to the government, you can take it back. But what happens if I cancel after 30th November? Government says, I will not give you a refund. Let the buyer file a separate refund application. We have one circular 170 which has given a format of RFD 01 for separately for the buyers to claim the refund of the GST which they have paid to the government.
What happens if the developer?
I'll come to you, sir. I'll take this question. Yes.
Yeah, if the developer sells to the customer after completion of all works and after getting the release order and collects the first advance only after completion of the.
Right. So let me define the word sale. The word sale is not the registering the property. The word sale is sale agreement. Now, should the sale agreement coupled with receipt of money? If my first receipt happens after OC, can I say that I have sold after OC? Yes. But if I have entered the sale agreement before, you pick that. But in a plotted development, how does it matter whether a sale agreement is before release order or after release order? It only matters for the purpose of valuation. If I did not sell anything, I have to pay tax. On what value? I will go with the book value, which is guidance value. Right? So it will be at least 30% lower than the commercial transaction value. But if I actually made a sale, that is why I said unsold units, you will always pick with the last sale date, because that is the open market value. So the rule 27 of the CGST rule tells that whenever the valuation is not available, you go by the open market value, which is the nearest value. So when you have a unit sold, you will pick that. So how does the agreements matter? Is only determining the value. In either case, you will have to pay GST on all the units that you have received by virtue of the joint development agreement. The market value is saleable value, and the saleable value is by the sale agreement value or the guidance value into 18% with the input tax credit.
So, at the incidence is also, we can take it at the point of JD entered.
Incidence is always at the point of JD enter.
So we can always pay at the well before the OC or
Yes,
registered required.
you can actually decide the JD value on the date of JD and pay the tax. So the question is, if that is the thing, the agreement, the guidance value is 30-40% lower, isn't it better off for me to pay tax on the JD date? Right? Answer is yes, but reality no. Right? Government thought everything. A question is, you will be paying tax. Where is input tax credit? After JD, you will start doing all the work. So you paid the tax. Now you are sitting with the input tax credit. Can I use anything? No. Can I transfer to other project? No. Can I claim a refund? Bar. No. What will happen to it? It becomes a cost.
So in the last sale lead, if you show the breakup of land cost and development cost, is that the benchmark? Last sale lead which you're saying.
So you will pay the
Which
land
is
cost.
obviously, development cost obviously market value, ESR.
No. On development cost, that is what this government said. There are people who will do the split. If you do the split, on the development you will anyhow have to pay. If you do the split,
Plus,
the unsplit value will be adopted towards the valuation. So anyhow you will be paying on the total value. So making that split will not make any difference. So actually I will say that they have thought through well and codified it. So just to summarize, there are multiple
What if,
entries.
again, one more question. What
Yeah.
if I cancel the JDA and I raise an invoice to landlord
Mhm.
and I'll pass the input again. Anyhow, he'll pay the
Landlord will not get any input.
Anything, yeah, I'm going to pay it to government.
Yeah.
I'll take all the plots as an agreement or whatever the value of the total construction.
So in terms of tax planning, we can do many things. So we can
Which one is better idea? It's always.
never do business planning basis the tax. Do the business, basis the business, tax will arise and do it. Like sir was saying that, can I do an agreement of sale of those units and calculate the tax and do it? Again, answer is no. You will get into that hassle of untangling if you are booking something which you don't believe it to be true, that monies will be coming and all those things. So I would always say that you do the business, you know the foreseeable business is this way. We can suggest what is the best optimal route to optimize your cash flow plan. I'm not saying that the tax will be optimized. Tax can be optimized. Tax can always be planned. India permits tax planning. What is not permitted is tax avoiding. You cannot do anything such a way that tax will get avoided is not permitted. Right? So tax planning is managing the cash flows. Yeah. So,
as of now, most of us have been guided by our CA, GST experts. Pay the construction services cost plus 10% add करके just pay the GST and get out. That's what has been guided and opinion.
Yeah.
by most of them. What do you say?
Is that your good name, sir?
Dhananjay.
yeah. So, Dhananjay sir's advice which he received from a CA or a GST expert is, whatever the cost that I have incurred, pay 10%. So rule 30 of the CGST rules gives this value, one other valuation method, I pay this and move on, right? Isn't it better? Now, two clarification. Firstly, there is no GST expert in India. And everyone have their views. Like me, I am saying my view, which will not be agreed by Karnataka High Court, but it will be agreed by Orissa High Court. Finally, Supreme Court will say something. It's always better to have a written opinion, always. Okay. That's point number one. Point number two, when you are listening from a lawyer, be careful. I have nothing against the lawyers. They are always like, I want to fight. Okay. In my view, not taxable means not taxable. Okay, you are saying tax, we will see in the court. Half the time he is only in the court, no. So he wants the matter to be in the court. So he is willing to litigate. Now, if you have appetite to litigate, listen to the lawyer. Otherwise, get the opinion, written opinion, most of the times from the chartered accountant. No offenses to the lawyers, okay? This is like they have the willing to fight. Chartered accountants, trust me, they are conservative, they don't want to fight. That's how they will do. Now, having said that, can I not adopt cost plus 10%? Why should I go to that market value? Right? But cost plus 10% is in rule 30. If I have to enter rule 30, I have to negate rule 27, 28, 29, then I have to jump to 30. Right? So the difference will become little less. Eventually you are paying, right? Now the arbitrage that you will be fighting is a small amount, but the cost of litigation that will go on will be a larger time period. So my personal suggestion, I will not say rule 30 is a right, which is cost plus 10% is not the thing. Now, isn't it not there in the law? Yes, it is there in the law. Is it an option? Yes, it is an option. Is it the safest option? Answer is no, it is not the safest option, because one, you already have sold something, so you know the value. Second, you don't have a reason to jump out of 27 and directly come to 30, logically speaking. But yes, you are paying tax, it's only a valuation difference. At least you will not be penalized under section 74 thinking as a fraud. There is a valuation difference, the order would be under 73.
And penalty on that.
Yeah, penalty 10%.
Interest penalty.
Interest will be equivalent to tax. Why 18%? Because no order will happen immediately. Right now you would be dealing 20 to 23 cases. We are in 26, 4 years over. 18% into 4 years, 72%. By the time it concludes, it comes to 100%. So interest invariably will be equivalent to the tax amount.
And I have a typical scenario, two landlords join together and develop a land. And they get into sharing. Is there any GST? Because the sharing model is totally different. Like I have 5 acres, one has 4 acres. It's not that 4 and 5 they are going to share. Probably one landlord says, okay, you will develop the cost, and it's only mutual agreement. There's no.
See, there is, sir is asking about when two landlords join together and do it, how will it happen? Theory, it will never happen. Point number 2, I'll come to you. Point number 2, it's one of the landlord has to assume himself as a developer. Could be 1 acre landholder or 5 acre landholder, it doesn't matter, right? We don't go by class 1 higher, class 2 higher, no, not required. Why? Because development is a cost that goes in. You have to, if you don't assume, one of them don't assume that position and both of them are servicing, this itself is a simplified law, many don't understand, officers don't understand. This person's landlord GST officer is X, this person's GST officer is Y. he wants to tax, he will also wants to tax, both will be into bigger soup. So, it is also always advisable, one of them has to assume themselves as a builder and complete the project.
So both will contribute at the cost.
Yeah, both will contribute, it will be at the
Not
cost,
invariably.
so, yes,
Not in the proportional.
it will not be in a proportion. Yeah.
So it is probably a smaller.
Like as a builder, when I am building, not necessarily in the joint development agreement, the entire land has to come from the landowner. I might acquire the front shops, I am taking the behind shops. Now by virtue of this, what is happening? My sharing ratio, I will not give him 35%, no, I will only give say 20%. Only for the 20% construction services will be coming in, right? So the law has very beautifully drafted, you pick any model. I would have done so many number of computations, okay, different, I take classes in NASIN and the Fiscal Policy Institute. Every time when I take the session, I give some 5 different permutation combinations, 1000 plus models I would have processed by now. It doesn't really impact. The government gets the same GST what they want, whichever the model you take. But it's just that if you make one computation error, you will end up with bigger problem solving it later.
So
No,
18%
you did not
GST.
understand my.
Yes. Yes, yes.
It's not final, like, is
Or
there
one
any
of the
GST?
landowner has to assume himself as a builder and continue the project from the taxation perspective. That's his answer.
Sir,
Okay, and the taxes needs to be, because he's not getting anything out of that other landlord's share.
No, he would be getting. It's when it is merged, land lost its identity. It is becoming an undivided share. Right?
So you meant to say the entire land, his land is also he needs to pay? No.
If he is selling before OC, in a plotted development,
Not at all.
in a plotted development, only to the extent of the share which the landlord is relinquishing and giving it extra that you are getting.
Sir, I have a question. 5 of us own 5 acres land.
Right.
So 5 of us apply for the plan sanction. We get the plan sanction from the authority. We take the work order. We start the development. Before
Who is we?
all 5 of us, after the plan sanction, we do a sharing agreement.
No. I want to understand who is we.
5 of us.
Okay.
5 of us own the land.
No, I get your question. Let me ask some questions. I want an answer for that. Now, does 5 of them, any one of them have an ability to develop,
Yes,
or they subcontract?
all 5 of us have, it is not taken by one, the responsibility is not taken by one person to develop. If the one person takes the responsibility, he becomes the developer, and as per the rule, he is liable to pay GST. All 5 of us do a sharing agreement. They know what product is theirs, which site is theirs. So they develop jointly and they sell. So that doesn't apply GST, right?
The question is, how can they develop jointly? That is something I need to be educated with. Let's say I have to dig the road, put the water pipeline, put the sanitary, electrical, other things.
Excavation, whatever is the cost, pro rata all 5 bear. Steel,
Okay, so excavation, all 5 pro rata will, let's say, I have given excavation cost to sir. Okay, sir is giving a bill of 10 lakhs. Now you will say, no, don't give me 10 lakhs. We are 5 people, we will pay you. Right? Now, who will he raise invoice on?
suppose he raises on all 5.
So now start looking the practicality of it. Like you have to go and buy one cable, right? So someone has to. It's like practically someone has to step into the builder. Now you may ask this question: if one person steps into the shoe of a builder, will I have to pay tax? Answer is no. You will only be paying tax on the value add that you will be getting for it. Let's say out of 5, you have assumed the position of the builder. Now each of you have 1 acre. Right, let's say on each acre, hypothetically 40 units have been converted. 40 into 5, 200 units. Each of you should ideally get 40 units. But one person is the one who have spent money for all. Now, in lieu of that, either you may get money from others or you may get the land from others. When you are getting money from others, that's your sale value. When you are getting the land from others, only that portion is the sale value, right? So you will not end up paying more tax. Hope people at the back, I'm audible, clear, and is the question clear? Yeah, okay. Does it answer? Sounds like it answered, but somewhere some doubts.
Sir, one question. If a developer enters into a joint development agreement with a landowner and some sharing ratio will be there 50% or 40% or
Plotted.
whatever plotted. And both the shares, that is the landowner's share as well as the developer's share, no agreement is made, nothing is sold till the release order and e-khata is obtained for all the plots. In that case, is GST applicable?
So GST in a plotted development is 100% applicable. Because developer is developing something for developing that activity, landowner is willing to give the plots. GST is not applicable when the plots are sold. But till the plots are sold, so plots becoming origin of the plots, it was a barren land, it converted into plots. There's an activity of service that happened. So for the GST is applicable on converting that raw material into finished product. It's applicable.
How is the value added? decided?
Exactly. So now value add, that is what sir was saying, can I go by cost plus 10%? The value add, when you have sold the plot, value of the plot. When you have not sold the plot, guidance value which is there given by the SR rate, the ready reckoner rate, that's the value.
What if we sell, we pay the GST, not at the completion date, we pay the GST at the sale point.
You pay at the sale point. The government
Can
says,
it be done?
that is what sir was asking, what is the sale, what is the date I have to reckon? For an apartment they have given beautifully, this they have not given. But if I take the first date, ITC would left behind. If I take the last date, the farther I go, my value which I have to pay on it, it will increase. So it's a commercial decision. So as and when you are selling it, you discharge 100% of it, so you are seizing your further liabilities. So it's a cash flow planning.
The
Yes, sir.
input credit is proportional to the share of the JV share of?
No, 100%.
The complete input we get.
100%. There is no concept
The
of
share is
proportion.
40-60 or whatever, but 100% input we get.
See,
Complete development cost we can take input.
if you think of this 40-60, it will get confused. Let's say I have developed the 100 plots, 30 plots has come to the builder, 70 is with the landowner. So should I distribute this? Answer is no. I did all the work. For doing the work, I have to get the money. I did not get the money. They said, landowner said, I don't have the money, you keep this 30 plots. So there is a sale happened, I got the money. Instead of money, a monetary equivalent.
So GST can be at the sale point also, when I transfer the property, that point also I can pay and get off.
You can pay, then you will end up paying more tax.
So that's okay, but tenure, that can also be done.
Yes. But release order, it ceases. You can't say that I have some plots not sold. You can't eternally continue.
So what would be the, probably 2 years,
1
3 years?
month after release.
The plotted development, 6 months to 1 year. Every builder wants to get out of the project and move to the next project. Apartment, I'll say 2 years, 3 years. Plotted development, 1 year max.
Any questions from the back? You people are very quiet. If you have any questions, you are free to ask.
If there are no questions, that means I have understood everything.
Hopefully.
Hopefully.
Okay, so I'm leaving my email ID. So if you have any questions, you can write it to me. And
I request you to please join us on the dais, sir. Subramania sir, Dhananjay, Berry sir, please join me on the dais. CA